Okay. Wow. What a week of craziness in the markets. It feels like the never ending just ups and downs and FUD and fake news and reports and this and that and the politics and the economics. I don't always do these on Friday afternoons, but I was so motivated today after seeing how crazy this week has been. I just want to touch base on some things and also want to talk about this idea of assets and inflation. And before I do, I just want to throw this out there too. Like I just literally got off the phone after having the same number call me like legitimately 30 or 40 times this week, probably more. And it's these solar companies. Holy moly, they will not stop calling me. And then the crazy part about it is this is my rant to kick the video off. As I get the guy on the phone and I was like, man, how do I get off your list? Because you call me nonstop. And he says to me, well, we're just trying to save you money on your solar. And I'm like, can I get your manager's name or who you are or who you're calling from? And he literally was like, I don't get what your problem is. Um, I just want to save you money on your electricity. Can you believe that? I just had to start there to like vent about it because this just happened right as I was about to hit go live. I got that call and I couldn't believe it. It's like the 30th time. So anyways, I digress. I was thinking about like this is almost like a great segue of like I'm getting nonstop cold calls about electrical solar panels, and it's like, oh my gosh, I couldn't believe it when I got through after telling these guys like 1,000 times to stop calling my phone and taking off the list. And honestly, like next time they call, I'm gonna hook it up and record it so you can hear the nonsense because I think a lot of people are getting scammed, and it's getting worse and worse when even like legitimate companies are starting to do this. So anyways, that's my rant about my tons of nonstop phone calls from the same company calling from the same number every time denying that it is them calling me. Uh, which is really the chaos of that brings me to the chaos of the week. Uh, Looking at the way the market is moving right now, it is just so heavily driven by media. And it's not to say that this hasn't been the way it's been for a long time, but like old news gets reshuffled and somehow called new news and the markets go crazy and whipsaw. And I'm a strategist by nature. I look at the way things move. I look at the way the markets move. I do talk about this all the time. That's why I'm constantly hedging and understanding my risk. And I think that what we like to do is we like to blame these swings that we're seeing. And I'm going to jump into really what I'm talking about in a minute here. We blame swings on, paper hands. That's a really popular one nowadays. Or, people who are scared and jump out of their positions. Well, look, I mean, it's hard to not be scared when the news is always the end of the world at every moment of every day, and then just suddenly everything's fine again the next day. So, like today was a perfect example where I wake up and see cryptocurrency prices have just gotten absolutely smashed out of nowhere. And suddenly it's talk about how the Chinese have decided yet again that crypto is now illegal and they're not going to allow trading. Yes, we know. They've already shut down mining. Mining, in essence, is the key to having a lot of this. The exchanges have been shut down. We know this. This is already part of this. But what do we see is we see the markets react like crazy because it feels like it's something new. When the media reports on it, it's as if we've never heard this before. And for the average investor out there who doesn't do this for a living or doesn't spend all their time watching the markets, of course, it's going to look like some piece of brand new event that's happened. They have no control over it and they're looking to save their money because a lot of people are working really, really hard. They're trying to do the right things by investing in assets. And constantly there's this barrage of attack on the asset classes that they're in. And frankly, it doesn't matter if it's stocks, ETFs, MLPs, LLCs, crypto, or real estate. I'm also getting message here that my network might be unstable. So hopefully I'm still coming through here. Not sure. But I think this raises a really good point of like we need to be on top of the asset classes that we're in. I think it's really important to make sure that we're tracking the news in and around the things we're investing in. And I think it's really important also to understand that when you hold assets over the long term, and nothing's ever guaranteed, of course, but when you hold assets over the long term, they typically do rise, and there's a reason for this. It's because inflationary pressure pushes the value of the dollar down in the case of the United States. But with that was typically an increase in asset prices. This is why we see real estate go up. This is why when you own a home, you see that value of that real estate go up a lot of times. That's not to say that there isn't whipsawing. That isn't to say that there are times when it goes down, right? I think we all know this. But I think at the end of the day, what we're really looking out for is, the average everyday person who's looking to build a 401k or an IRA or build up their portfolio or buy their first bit of real estate or even invest in crypto, which albeit is, much more volatile and almost inherently risky asset, but an asset nonetheless. I think that one thing you have to start to feel is like the cycle of how these things are happening and how they seem to revert back so quickly afterwards. I couldn't help but watch as the markets fell very quickly the other day, just for everything to go way down, and then suddenly people are ready to pounce back in. And it's this cycle of big bad news event, media jumps all over it, prices fall very quickly, and people get out of their positions. Or even worse, what we're seeing a lot of is heavy leverage positions are getting wiped out, and you're left with nothing because you were over leveraged on a position. And suddenly there's always someone there willing to buy back in. And what I want to present to you is the fact that this isn't really a conspiracy theory. This is just the way finance works sometimes. You can call it whatever you want. You can say it's rigged or it's unfair. But if you're highly leveraged to the hilt and there's a big dip, you're giving up your shares, your coins, your holdings at a discount to someone else who maybe was waiting to get in on the market and doesn't get scared by news, or is holding a cash position and has the room to buy when they crash or dip or whatever. So what I would just say is, like, if you're seeing these news events come across and it's scary and you're very nervous about it, you know, just look at how these things move over time. Do they end up going back up? Is it like a systematic problem across the board? Is it just an individual company missed an earnings report or something? I had sent out a note earlier in the community that Nike had a big miss. Cool. That's just Nike. That's not the entire market. That's not real estate. That's not crypto. That's not gold. That's not silver. So if you're jumping in and out of positions every time a piece of news comes across, you got to have a strategy for dealing with this. It can't consistently be buy high and sell low. You're going to be left with nothing at the end of the day. And even more so, if you're in a position where you're using leverage, and I mean, highly leveraged, like more than a handful of percent against your portfolio, make sure you know exactly what you're doing. Leverage is really for highly skilled and or professional traders. Not to say that you may not be very skilled and know what you're doing, but if you're not hedged for that downside risk and you get wiped out, that sets back a lot of plans, a lot of growth for a lot of people out there. And it doesn't have to happen. It's so controllable. So make sure you're just doing that research to understand what's happening there. I mean, I look at like the way the market moved all week, and positions that I love and feel very strong about were whipsawing for absolutely no reason on no news whatsoever. And it's funny because I'm looking at like take like Palantir, for example, right? They put a bunch of money into gold. Then you've got MicroStrategy, who's putting a lot of money into Bitcoin. They're keeping these things on their treasuries or keeping them as assets on the company books. So when MicroStrategy sees a big swing because Bitcoin sees a big swing, gold sees a big swing, maybe you see Palantir with a big swing. But the reality is these are not new ideas. Yeah, there may be new things in the sense of like, it's interesting to talk about how Saylor is leveraging Bitcoin as part of his treasury, but it's no different than when they have cash sitting there losing to the inflation rate. So just really make sure you understand more about where you're putting your money and if there is risk while you're doing that. I think that the pressure to get into the markets nowadays is very high and is very easy because a lot of the apps that are out there, the Robinhoods, the Weebles, I don't even know the other. There's so many. I think that it makes it very easy to get in, which is amazing. And you absolutely should be learning about the markets and getting into the markets. But I think that investing and trading is part of your overall financial perspective. And a big part of that has to be how you manage the risk, how you manage the debt, how you're taking on debt for that investing and trading. So it's just a note to stand back on a Friday afternoon and think about where the markets are, how they're jumping and bouncing all over the place based on news, and how often this news is really just designed to get your eyes on the screen of a news channel or their website or reading their tweets so that they generate some advertising dollars as well. I think that that's such a key thing to remember here is there are forces at play in the financial world that are very tough to overcome. And sometimes the way things move is by putting out stories or building a lot of attention around negative things or even positive things for that matter. But just using that China piece as a key example, this is not news, guys. They've reported so many times that they're shutting down crypto. If the first time you heard it, you were so scared you sold everything, why are you getting back in? Because if now the 15th, the 20th, the 100th, the 1,000th time we're going to hear it, you jump out again after getting in, you're just hurting yourself and hurting your money. Make sure you have a pathway to get into it in a safe way and then leveraging some value for yourself there. I'm still getting this connection is unstable, so hopefully this is getting through. Um, but I want to touch on this again here. Like, the reason why it's important to think in terms of assets, and especially assets that don't have to have carrying costs. So, i.e., if you're buying on leverage or holding on leverage, assets are just going to be the most likely to rise over time due to that inflationary pressure. There's a million different stories out there about this. There's a million different ways to think about it. But at the end of the day, the simplest way to look at it is home prices over a 30, 40, 50-year period, the stock market over that same period. Things that have degrees of volatility and have degrees of movement against the markets in general are going to be affected by that inflation rate. It doesn't mean it's linear. It doesn't mean it's going to always move in the same direction. It doesn't mean it's always going to go up either. But I think if you stretch out that horizon and understand how it affects it, you're going to get a feel for it. And, I just want to talk about leverage too while I'm sort of on this talk track. Leverage is a maker of profits for sure, but it's a taker of capital as well. And it's important to know that. I've seen a lot lately, especially in the crypto markets, where we keep seeing these recurring stories of people getting wiped out. People who know what they're doing, very, very strong, experienced investors and traders. And leverage worked great as a multiplier for certain types of trading and certainly for some types of investing, but short-term stuff. You don't want to be holding, you don't want to be holding positions long-term and paying interest on those positions. That's not really investing, guys, right? So like, make sure you understand where the risk is, what that risk will look like for you, because if you're holding an asset that does not generate income in the near term, and that's a long-term holding, every interest payment you make on that borrowed money, you really have to mentally subtract from those earnings you're going to ultimately get on that position. And especially if you're using leverage for something that's very volatile, you need to you need to be really tight on where your stops and exits are. Like, get in because you see a big move coming. Great. Maybe give yourself some breathing room on the downside so you don't get stopped out right away every time, for sure. There's lots of different methods and lots of different methodologies for doing this. But it's very, very, very vital that if you take risk, you have protection on both sides so that you grab your profit when you get to the number you're looking for, or you don't lose all of that capital if you miss it and go the wrong direction. One of the things that makes for excellent traders, and this is what we see against the names that we hear about all the time, is you can be 100% behind an idea, but 30 seconds, something changes, you're on to the next idea, dump it, get out. You don't want to stick with bad ideas, and you don't want to stick with bad plans. You don't want to stick with a bad strategy if the data has changed. If nothing has changed and you still believe 100%, you have high conviction, stick with it. If you believe Bitcoin is the future and it's going to be a multiple of where it is today, then the news from China that was already out shouldn't cause you to jump out of your position. But when we look at the transactions and what happens within these markets, whether it's crypto, stocks, etc., this keeps happening over and over again. And all you're doing is giving up your money so someone else can come in and buy it lower and then enjoy the ride back up again. Today was like such a perfect example of a market that went down quite a bit across a number of areas in the market. Frankly, there's stocks that I absolutely love and have very, very high convictions in, and I hold them at scale. And I see them go down on days like today off nothing, zero news, very strong companies with great balance sheets, huge growth potential. But I see them suddenly go down for no reason. I'm a buyer. I'm sitting on the sidelines waiting for that to happen. I'm going to get in and buy more, strengthen my position, and constantly look for areas where I can get dip money piled in there. But I can't do that if I'm at 100% leverage on all of my positions. So I won't belabor the point, I suppose. It's just an interesting topic. And I was thinking too, like, this week is interesting because FinCon is going on down in Austin, Texas, which is really like a lot of people who work in and around the financial content advice area. I guess I sort of fit into that, although it's just more because I like doing this. And I was sort of thinking to myself, like, sometimes it can be tough because it doesn't take a lot to give advice. You could be your first day in the market, but be known as a professional because you talk really well or give good advice. And I think that what you also have to do, just like the media, just like YouTube, just like coaches, just like financial advisors, use these as signals or indicators as part of your overall strategy to know what and where you're doing it, and then back it up with real data. right? Like look at inflation and how it grows assets over time. Look at the way the markets move when bad news comes out and how quickly they recover. Make sure that when you're hearing a story, it's not, 6 days and $1 short after the fact and you're the last one in. I was just actually checking this right now. I'll do it right now before I jump off. Let me see. Um, I was in crypto really early, and I'm thankful for that. But like I'm looking at Bitcoin right now, and over the past 5 days, this thing has been swinging between like low 40,000 and change to just under about 45,000, maybe past it a little bit. That's a $5,000 swing. That's better than 10%. And if you really think about it, what has caused this to move 10% up and down? And it is literally going up and down. And the reality is it's just news being put out there, but you don't know by who. You don't know what the sources are oftentimes. I'm not saying you personally don't, but most people don't. So just be aware of that. And this is the same thing with stock prices. Many times great companies will have a misstep, but it doesn't deviate from the path they're going to be on in a year or 2 years. This is why oftentimes when we look at analyst reports, we also understand, they might be calling a $50 stock at $100. Doesn't mean in the next week. It might mean in 12 months, could be 18 months. So you have to give these positions time to work. My final comment for the day, just because I'm still fired up about my phone call or my 20 phone calls, frankly. When you hedge or you take a long short or you put a put against a hold, listen to me, a hold, you put a put against a position. I think one of the biggest mistakes people make when they're hedging, and I think that this is coming from the right now world that we live in, is they don't give their hedges time to make the money. I talked about married puts a week or two ago and the idea of like consistently having a put to protect large equity positions. The reason the put's there is for insurance, but it's also to take advantage of it when things do go down. Earlier this week, a position that I like a whole lot just got absolutely crushed one day. And I just did my damnedest to see if there was any data backing up why this thing was getting killed. And it turned out that it was really tied to some minuscule possible connection to a data point that turned out to be totally false. So that was one where on that particular position, I bought a call right at that moment where I felt like it was getting near the bottom. I certainly never am going to be saying that I can predict tops and bottoms. I can't. But what I'm looking to do is find advantages in the intraday movement. I saw this thing come down a lot for an otherwise awesome, well-run company with great future prospects. I immediately picked up a couple of calls. I immediately put in my limit of where I wanted to sell. And by the end of the day, I actually saw like a 20% return on my money in that one call option. And again, only because I knew when I wanted to get in, I knew exactly where I wanted to get out. I saw the momentum to get it back there. I could have held longer and would have gotten more. Sure. I don't worry about things like that. But this is the way you have to look at it, is like, if it's going down for no reason and your conviction is that this is still underpriced to where you believe it is, find a way to take advantage of that on top of what you're already doing within your portfolio or within that account anyways. So sorry, I'm ranting a little bit. I got a phone call that got me all fired up. I think that there's just so much opportunity right now when you do a little bit of research, you do a little bit of work, you understand where the market's going, and you build convictions based on data and a little bit of analysis. I think you can do really well and make yourself a whole lot of money and grow a portfolio. I'm going to be doing an episode soon, assuming anyone's getting this far in my video. I hope you are. But I'm really going to be digging into the details of like how we can start to work from a lower income and really build some value in and around in and around what you're earning, how you can look for ways to grow it, how you can look for ways to invest it and start to build a nest egg and a little bit of protection for yourself. So I think that with the workforce where it is today, we're seeing a lot of jobs that traditionally were not paying much at all, starting to have to slowly bring that pay up. Maybe it's the right time to ask for a raise. Maybe it's the right time to ask about a different benefit. But just in general, getting your arms in and around that, it's a great time to do it. And with that, I'll leave it to it. I'm going to do maybe at least another 1 or 2 videos this week because I think there's a lot going on. So thanks for watching. Hopefully you made it to the end. And otherwise, see you later. Have a good one. Thanks.